Welcome back to Investing Talk podcast. Today we're zooming in on Amkor technology, a really interesting player in the semiconductor world. You, with your sharp eye on technology and investment, flagged Amkor for us, and we've pulled together a detailed look to give you a clear understanding of where they stand right now.
And we have some solid information to work with. A comprehensive due diligence report from this year, an overview of the company's operations and recent performance.
Right.
And a rundown of their latest news, including their upcoming earnings call.
Yeah.
So our goal today is to take all of this apart and, highlight what's most significant for you to know.
Okay, let's get started then. Understanding the basics first. Who is Amkor? Founded way back in 1968, headquarters in Tempe, Arizona. That's quite a long history.
It is. And they operate globally, which tells you something about their scale.
Definitely.
What's particularly interesting is their specific role. They are a leading provider of outsourced semiconductor packaging and test services, OSAT, as it's known.
Oh, okay. So they don't design the chips.
No. Think about it. The companies that design those incredibly complex microchips need specialists to, put them in their protective cases, essentially, and test them rigorously.
Make sure they actually work.
Precisely.
Yeah.
In everything from your smartphone to advanced AI systems, that's where Amkor comes in.
Right. And their range of services sounds pretty cutting edge. The notes mention advanced packaging, flip chip, wafer-level packages, system-in-package modules.
This isn't just basic assembly. It's sophisticated stuff. It really impacts the chip's final performance.
And they're serving some critical industries right now. AI, automotive, communications, computing, consumer electronics, basically everything driving tech.
That's it. So you can see their position. While they aren't designing the cores, they are indispensable in getting those processors ready for use in all these high-growth areas.
The info also mentioned they were the second largest OSAT provider globally back in 2019.
That gives you a sense of their historical weight. Still a major player.
Being number 2 globally is, significant. Who are they up against? The sources mention ASE Technology, JC Tama-Allen.
Those are the main competitors, yes. It's a competitive field.
So what advantages does Amkor have in that kind of environment?
The report highlights a couple of key things. First, their sheer size gives them a cost advantage. Scale matters.
Economies of scale, right?
Second, they have a well-established brand. Reliability, precision, that's crucial here. A long track record helps.
Trust is important when you're dealing with tiny, complex components.
Absolutely. And finally, strategic partnerships. They work with major players like TSMC and Infineon. That gives them access, keeps them plugged into the supply chain.
Okay, that makes perfect sense. Now, let's maybe switch gears a bit to the financial side. Sometimes the numbers tell a different story or add nuance.
For sure.
We have a couple of revenue figures here. Around $6.32 billion from the due diligence in recent news, but the overview said $6.50 for 2023. Minor difference.
It's likely just different reporting periods or maybe preliminary versus final numbers. The key takeaway is the scale. It's a multi-billion-dollar business.
Got it. And the Q4 2024 earnings per share EPS was $0.43. That actually beat the consensus estimates.
It did. That's a positive sign.
And looking ahead, the EPS forecast for next year shows quite a jump, from $1.47 to $1.98. That's pretty significant growth expected.
Yeah, it is. It suggests analysts anticipate a notable improvement in profitability, possibly driven by demand in those key sectors we talked about: AI, automotive, maybe 5G.
Okay. And what about valuation? The PE ratios look low. Trailing PE at 11.57, forward PE at 11.25.
Yeah, compared to the broader market, those numbers do suggest the stock might be undervalued.
Interesting. Could signal an opportunity. And their debt-to-equity ratio, 27.7%, seems manageable.
Agreed. Doesn't look like excessive borrowing, points to a relatively stable financial foundation.
Yeah, we need to balance that, right? Because the stock price itself has taken a hit, down about 26% in the past month and, 51% over the past year.
That's the concerning trend. That significant decline needs explaining.
And the company overview also mentioned negative EPS growth in recent years. So the past performance hasn't been as strong as the future forecast suggests.
Exactly. It's a bit of a mixed picture financially. Which leads us to the question, why the disconnect?
Right. What's driving the optimism for growth, and what are the headwinds causing the recent slump?
Well, the growth drivers are pretty clear from the reports. Demand for advanced packaging, it's fueled by AI, electric vehicles, 5G rollout, all huge trends.
Those are definitely the hot areas. Constant need for better, faster, more efficient chips there.
But on the flip side, challenges. Supply chain disruptions are always a risk in semiconductors, as we
Right.
know.
We've seen plenty of that recently.
Indeed. Regulatory changes, especially trade-related, can impact them too. And just the pace of technology, if a new packaging tech emerges and they're behind, that's a problem.
And the Q4 results seem to show some of this playing out. Growth in computing was good.
Yes, encouraging there.
But they specifically mentioned challenges in automotive and industrial markets, so it's uneven.
That's a crucial observation. Not all their end markets are firing on all cylinders. Some face their own difficulties.
Okay, so let's talk recent developments then. Catalysts. The big one seems to be the Q1 2025 earnings announcement, April 28th.
Definitely a key date. After market close, with a conference call, investors will be watching that very closely.
Pivotal moments, those calls. We already have the Q4 numbers. $1.63 billion net sales, $106 million net income, and full year 2024 was $6.32 billion sales, $354 million net income. Substantial figures.
They are. And beyond the numbers, some strategic moves are noteworthy. That partnership with Lightmatter, developing 3D packaged chips for AI.
3D packaging. That sounds important for AI performance.
It really is. It allows for packing more power and efficiency into a smaller space. This collaboration shows Amkor is innovating, pushing into advanced packaging for that critical AI market. It suggests they aim to be a leader there.
Sounds like a smart, forward-thinking move. And also returning value to shareholders. They increased the quarterly dividend by 5%, and a special dividend, too.
Can often be seen as a sign of management confidence in the business's financial health, a willingness to share success.
Okay, so let's circle back to valuation and risks for a moment. We mentioned the low PE ratio, which might attract value investors.
Correct. Potential value play.
But we also have those red flags, the recent EPS decline, the stock price volatility. Those can't be ignored.
Absolutely not. And the due diligence report specifically flags supply chain issues and regulatory uncertainty as key risks. These are somewhat inherent to the industry, but still significant for Amkor.
We don't have their beta or price to book from this info, but those would be other metrics investors usually check for risk and asset valuation.
Correct. Useful metrics to look up for a fuller picture.
So putting it all together, what's the general market feeling about Amkor right now? Seems conflicted.
Mixed is a good word for it. There's definitely concern about the recent performance, reflected in that stock price drop.
Understandable.
But that lower PE ratio is catching the eye of investors looking for potential bargains. So that upcoming earnings release on April 28th, it feels like a really crucial moment. It could significantly shift perception.
So for you, the listener, kind of summarizing our discussion on Amkor, you've got a major player in a vital tech sector, semiconductor packaging and testing, strategically positioned for big trends like AI and EVs. But they're also dealing with a complex economy, some specific industry challenges. That earnings report end of April is going to be critical.
Very critical. Watch how the results line up with those growth forecasts we talked about.
And listen for their commentary on auto and industrial versus computing.
Absolutely. Pay close attention to that earnings call. See how their actual financials stack up against those optimistic projections. Listen carefully to what they say about trends in automotive and industrial, where things have been weaker, versus the strength in computing. Their perspective will be really valuable.
That strategic partnership on AI packaging, that's another key thing to keep an eye on, too.
It is. And it brings up a broader point to consider. How does being an outsourced provider like Amkor affect their resilience during downturns compared to the chip designers or manufacturers themselves? Something to think about.
We trust this breakdown has given you a solid foundation for understanding Amkor technology. As always, there's more digging you can do. Maybe check out their investor relations site for the full reports.
Good idea.
And see how analysts react after that earnings call. What new questions does all this raise for you about the semiconductor industry or Amkor's specific spot within it?
Keep thinking, keep questioning.
And remember to subscribe, like, and comment if you found this helpful. Your feedback really helps us shape future discussions around what matters most to you.
Thank you for joining us for this look at Amkor.
Until next time.